Hey guys, in this video I'm going to be talking about mortgage pre-approvals. If you're looking to purchase a property, a pre-approval is essential in the process. Think of it as like shopping with confidence, because what it is a document that states the maximum amount of money that a lender is willing to loan you to purchase a property. So you knowing this number will serve as a guide for you when you're going out to look at properties, versus not knowing what you can afford and then you put an offer in a property that you can't afford and then the deal falls through. So get a pre-approval. I always suggest to my client to get one done with their personal bank as one with a mortgage broker. The reason I suggest their personal bank is they already have an existing relationship with their bank, so if they're in good standing, chances are they can get a lower rate, of course depending on other circumstances or other factors as well. Getting one done with a mortgage broker, they typically have the lowest rate because they're not just tied to one bank, they work with many different lenders. So there are a variety of options that will be available to you. To verify your income for your pre-approval, they'll need your employment letter, and that letter should state your length of employment, of course your job title, and your salary. If you're not a salaried worker, you must have the hours worked per week as well as how much you get paid per hour. Another thing that they'll use to verify your income is your notice of assessment. So try to have your two most recent notice of assessment readily available to you when you're going to get qualified. If you have different sources of income, don't discount the side hustle, guys. Like, especially if you can show proof of consistent income coming in, use that side hustle as a source of income, because any source of income can help you to qualify for a bigger loan. Next thing that you'll need to know beforehand, try to get a copy of your credit history. Some people have no idea what their credit is, and if there's a mistake on your credit that negatively affects your score, you are able to fix that beforehand if you had that information prior to going to get qualified. So get a copy of that. If it turns out that you have bad credit, at least this will give you an opportunity to work towards improving your credit score as well, right? Next thing you'll need to know, you have to have some idea of your debts, because your bank will want to know what's your monthly payment. For example, if you have student loan, credit card debt, line of credit debt, then you should have an idea of what your monthly payments are so that you can provide to them, because that's a part of the process to get qualified. Another thing that you'll need to provide is your source of down payment. Down payment cannot come from borrowed funds, so your line of credit for down payment, that down not work. So your down payment can come from your savings, or for first-time home buyers, you can use your RSP to qualify for down payment as well. If you are separated or divorced, it's a good idea to have your separation agreement, because the bank will want to see that, and preferably they want a court order separation agreement or one prepared by a lawyer, because what they're looking for on that is if you have like spousal support payments or child support payments, because that will count against your income, because that's a monthly expense that you are paying out, right? I think I have covered everything. If you have any more questions, you can always send me a direct message, or you can visit the link in my bio for my website info, and you can contact me through there. So hopefully this was of help to you. Get your pre-approval done. Bye guys.